AOCI, Accumulated Other Comprehensive Income. There are 4 types of transactions that give rise to entries in this area, and it is one of the more complex areas of accounting. As I mentioned earlier, the AOCI are items where it looks like a gain or loss, or it looks like a profit or loss, but it does not go through the retained earnings and the income statement. It is a straight shot into its own account called AOCI. And these 4 are foreign currency translations related to the balance sheet. The second are gains and losses on certain types of marketable securities called available for sale. The employee benefit costs, but not all, just certain ones that change the valuation or liabilities. And the gains and losses on derivative, but not all derivatives, certain ones. So let's go through in slightly more detail. Foreign currency translations related to the income statement go through the income statement. But the ones that relate to the assets and liabilities, namely the balance sheet, do not go to the income statement and instead are adjusted in AOCI. Second, gains and losses. This is pre-2018. If it is after 2018, the rules will change and this will no longer be in play. There are certain passive marketable securities that the companies may deem as available for sale, AFS. If they deem it as AFS and there's an unrealized gain or loss based on the market value changes, do not record it against the income statement. It's recorded directly to AOCI. The third item is the employee benefit plans, and these would be certain gains and losses, again unrealized, that relate to their investments or their liabilities. They go directly to AOCI and not the income statement. And they're held there until there's a change from year to year. So one year if there's a gain, it would go AOCI. Next year if there's a loss, it again goes AOCI and just stays there because they're unrealized. And fourth are gains and losses on certain derivatives and hedges. And the ones that are bypassing the income statement coming directly to AOCI are those related to interest rate, foreign exchange rate, and commodity prices. And these are hedging or derivatives used to hedge kind of a market risk of the business. What is a business risk that the marketplace is out of the control of business? And so we're saying we're exposed to interest rates or foreign exchange or commodity prices, so let's hedge that position. Any gain or losses that are unrealized will go to AOCI. This is distinguished from a hedge that's specific to an actual asset, liability, or transaction. For example, if we buy certain equipment from Japan and we committed to buy in yen, say 6 months from now, any derivative that hedges our payment for that transaction is not the type of foreign exchange hedge here. That is on a specific transaction. Again, this is a complex area. There are currently 4 items that go into AOCI, and they're fairly narrow in definition. If we look at J&J, we'll see it in 2 places. The top represents like what we might see. It's not required, but it's might see in the bottom of the income statement. Notice here that there's net earnings, and then underneath it is an adjustment to net income for these OCI, other comprehensive income. And the bottom is total comprehensive income. This entry of the net earnings for the year for 2015, for January 16, which is basically for the year 2015, that would go to retained earnings. These in yellow, which are OCI, are posted below to these 4 categories of AOCI. And we see the balance sheet, which is the accumulated. These yellow here are the changes just for this year, and the bottom line represents the balances that, like all balance sheet accounts, are the cumulative as of the reporting date. OCI is shown for the year at the bottom of the income statement. Sometimes, some do, some don't. But it doesn't matter because you can always see it in the statement of accumulated comprehensive income, which is part of or integrated with the statement of shareholders' equity. So it's here in detail of the 4 types, and the total of 2.4 billion shows it here, and it ties to this year's amount that's in the bottom of the income statement.